I'm George Feiger, the Dean of the Aston Business School in Birmingham, and along with my frequent colleague and co-editor Shaheen Shojai, we have put together a collection of essays on risk management. Shaheen and I have worked on risk management issues in financial institutions for a very long time. I was originally in the management consulting business, then investment banking, and in the private client business I had to manage a lot of risks directly. Shaheen has been a long-time management consultant and then the editor of a number of publications on the issue of risk management. Over the last 5 years, during the financial crisis, it became apparent that the paradigm of risk management that prevails or has prevailed up to this time, which is essentially that of more and more opaque and elaborate quantitative models which attempt to measure and control financial risks, has totally failed. It's time to start again. In order to start again, we've put together a collection of papers by distinguished experts on the many dimensions of risk management. This book is a collection of essays, and the essays are distinguished in a variety of ways. First, in terms of breadth. We cover the full spectrum of operations risk, technology and IT risk, regulatory risk, reputation risk, and even cultural issues in the context of risk-taking in financial institutions. Second, integration. Our authors have attempted to pull together the various dimensions of financial risk management into an integrated enterprise risk management framework. And thirdly, we do this to cover both banking and insurance. Typically, these industries are treated separately, even though the financial risks in both of them are essentially the same. As an indication of the breadth of topics covered in this collection of essays, we deal with issues like the actuarial problems of asset liability management in the insurance industry and the problems of dealing with customers over these increasingly complicated products. We also move into the area of IT and operational risk in high-speed trading, and indeed we have a very interesting contribution on how to develop and deploy the algorithms that are used in these kinds of high-speed trading and other trading situations. In terms of integration, we begin by looking at regulatory risk, because regulatory risk is the single most important enterprise risk. The regulators are the only people who have the authority to switch off the lights and lock the door on a business. We then look at ways of breaking financial businesses, banks and insurance companies down into fundamental building blocks and the components that join these building blocks. And a number of our authors explore how one can pull these things together into one integrated enterprise risk framework. And to cap this kind of discussion, we also have a very interesting presentation by one of our authors of the kind of culture that fosters behavior like rogue trading, and also the kind of self-awareness that an organization needs to handle reputational risk. Since the deregulation of finance starting in the late 1970s, the financial industry has built a complicated web of products, of markets, of institutions and structures, the connections between which nobody fully understands. And we have seen through the financial crisis that neither the regulators nor the participants understood how things were connected, and when some parts started to fall, they pulled other parts down. This web of connections is the key to the difficulties of managing financial crises. It's a topic of research rather than knowledge. One cannot present this in a way that can be used for immediate management. A corollary of this is that while the financial industry has globalized, the regulators have not. So what we have is one integrated financial industry, and integrated, as I've said, in mysterious ways, attempting management through a patchwork of individual regulators. This creates loopholes, this creates problems, it creates opportunities to arbitrage the regulators. And these issues are the ones that any manager or indeed any regulator of the financial industry needs to cope with for the foreseeable future.